All right, good morning, everyone. It is 9 o'clock in the morning on on January 24th, 2021, or 2022. Good heavens. January 24th, 2022. And this is my pre-market strategy session. So, got into the office a little bit late this morning, probably about 15 minutes ago, and haven't really been able to do a full pre-market workup yet. So, I'm going to get to work here on my risk ranges, the risk range signals that I like to use for trading. In any case, though, if you're a trader, you're well aware that today's pre-market session is looking really bearish. In the meantime, though, I'm just going to put these levels up, and then I can see about 1.87. I can see about what's looking at a good spot according to the risk ranges for a trade. 1.65, and this is the 10-year. SPX has definitely turned bearish. Let's see, the top end of the SPX is 4633, 4633, and the low end is 4349, 4349. Okay. Very interesting here. We have this gap, these two yellow lines. Let's go back here and look at the, here's a gap. So I love gaps. Now, I would expect, so the risk range, even though the risk range is down here at 43.49, I'd expect to see a bounce at 43.72. That is the opposite side of the gap, the opposite approach to the gap. Here, let me make this larger. So these two dotted yellow lines right here, was that a weekend? No, it was the 13th to the 14th. So it gapped up here. Here's the highest point. This is the close. The close is at like 43.64, but the day's high is at 43.86. And then it gapped up the next day and just really ran. And it went up to, the bottom of the gap is 43.72, and the top of the gap is 43.86. As where we are right now, we are standing. The market is opening up about 10 points higher than the top of the gap. Today, even, it wouldn't surprise me to see it happen today. I wouldn't be surprised to see it come down, hit the bottom of the gap right here at 43.72, and then bounce away. So for a contrarian, that looks like a good spot to take a trade. To me, in my personal opinion, it looks like a good spot for people to either start taking profits on their shorts or get into a speculative long. I prefer to trade in the direction of the trend. Just statistically speaking, trading in the same direction as the trend is going to be, you're going to have a higher rate of success than trading against the trend. It's just the counter trend moves, especially when so the market isn't crashing necessarily. This, as of right now, is still just a correction. Although if we look at this thing, let's look at the SPY on the weekly here. And you'll see some parallels, I believe. So let's see, and let me clean some of this up so it's a little bit easier to see. Here's January and February of 2020, and this is a crash, right? I think it crashed almost 40%, something like that. Then the Fed stepped in, and the government announced a stimulus package, and it's been essentially up from there. There have been a couple blips here and there, dips to buy and so forth. But you can see this big red breakdown candle right here on the week of the 24th of February. It's somewhat mimicked right here on the 18th of January, almost 2 years ago now. So the possibility of a crash is, it's always there, but there's nothing shutting, like the difference between now and what occurred in the beginning of 2020 is there was something that was shutting down the economy, essentially. It screeched everything to a halt. This go round, this is a correction from very, how do you want to call it, loose Fed policy, and now the Fed's tightening up. The accommodative policy. Oops, let me not do that. Let me redo that there. The accommodative policy is what created this gigantic run right here. So at the beginning of this run, the accommodative policy was announced both by the Fed and by the U.S. government, and now here we are, and the Fed is saying, hey, it's time to tighten up, reduce our balance sheet, raise rates, so on and so on, and the market's like, well, there goes the liquidity, there goes what the fuel was for this gigantic run. So I'm selling. When when you have accommodative policy, this is what you get. When you get tightening policy, this is what you get. And we're also at the same time, even though GDP is still growing, and even though inflation is still growing, there's a slowdown. There's a deceleration in the rate of change on both GDP growth and inflation growth. They're about to slow down. And so the Fed is starting to tighten into a slowdown, which is going to exacerbate this move right here. How far it goes, what the Fed does, so on and so on, who knows, but the general sort of sentiment is, it's time to sell and look for opportunities somewhere else. If things are going to start tightening up in the United States, then it's time to start looking for opportunities globally. And we live in a global financial system. You can go and buy stocks that are German or Swiss or Thailand, or I guess you say Thai, or even Russian or China or Japanese if you want to. So there are plenty of other economies and other great companies in those other economies to diversify into. So that looks to me like what's happening right now. All right. So there's the SPY on the weekly. I put a Fibonacci on this. I put it on the monthly, the monthly. And so if you go back to, and let me actually change this to the daily here, kind of squish it all together. So here's the daily chart on the SPY. And here's what I'm calling, the bottom of the move, and here's the top of the move. And so the 75% level that I like to use is here at $414, roughly. And so that'll be the first spot to look for support of this move. I think a lot of people, are looking at this spot right in here. This sort of this bottom right in here. That doesn't really, there's nothing going on there for me. I don't really see anything significant happening at that price level. That just happens to be where the market at one point took a dip. That's it. So 414 is kind of the area that I'm looking for, and it is definitely reaching for it in the pre-market. Let's see, right now in the pre-market it is at 430.89 on the SPY. Let's go. We'll take a look at the 10-minute here, because it looks like it's really starting to sell off here in the pre. Yeah, there it is. Oop, there it is in the pre-market there. Really starting to sell off in the pre-market. Drastically. So, okay, it'll provide a trade for us today at some point. I don't like to trade pre-market, so I'm going to wait until the regular market opens. So, okay, so then there's, and obviously this is going to open up quite a bit lower, quite a bit lower than 43.97 here. Let's see, 43, let's see where is the ES? Range plays, I think it's my large caps and stuff. Where is the ESF? Where did I put that? I know I have it somewhere. Large cap movers. I may have taken it out. Oh, no, here it is. Okay, so 43.30 is where it is right now. And let's see real quick. Let's go back to the daily risk range. 43.49. So it's opening up. If it opened up right now, it would open up below this risk level, this daily level right here. So yeah, definitely very bearish. Definitely looking very bearish. NASDAQ. So index. What level do we have on the index? So 15.025. 15,025 on the high end of the risk range. On the low end of the risk range, we have 13,601. On the Russell, take your time. Thank you. On the Russell, the high end is 2167. The low end of the risk range on the Russell is 1957. Okay. The VIX, look at that thing, it's really going nuts. So the high end of the VIX today, the risk range, 30.34, which is 30.34. It's definitely blown through the high end of the risk range already this morning. And the low end of the risk range is 1991. Oops. .91. All right. The dollar. So the dollar is bound to get pretty strong here. Once people start fleeing to the dollar, once stuff starts hitting the fan. So 96.42 is the high end, yeah. And then the low end here is 94.70, 94.70. Yeah, so the dollar is going to strengthen quite a bit. So you can put pressure on commodities. And then what do we have? Natural gas. I don't care about natural gas. Gold. Actually, I really don't care about gold either, although it's looking positive in the pre-market here. All right, I'll do gold. I'll put the risk ranges on gold. I can't stand trading gold. It just never, like the options, the premiums on the options, and it just never works out for me. If I'm going to do something with gold, I'll go to there's some gold producers and so forth that I prefer to use. Let's see, gold. There we go. High end is 1855, and the low end. Oops. And the low end is 1794. All right, gold's looking pretty. I'll buy gold on a pullback if I'm going to buy gold. Let's see. Oil. I don't really care about oil. B&O, AMDU, silver, SPY, so on and so on and so on. Okay. Joe, coffee. Maybe coffee will finally start to roll over right here. Coffee has been of the commodities in the commodities index, like the CRB index, commodities have been like really bearish, but coffee has been stubborn. I'm kind of wondering if coffee has now become like a consumer staple. I don't know. I mean, but this thing, coffee has just been really defying gravity. Okay, and so then let's see. Yeah, those are the risk ranges, and that's what's going on today. There's obviously very bearish sentiment on the market. Personally, I think that there is an opportunity being generated for a counter trend bounce, a move up, a green day. I mean, it's bound to happen. Things are bound to get oversold. I think there's bound to be something that comes out that says, oh, wait a second, the economy's okay, it's investable, you can invest in it here. This is a buy the dip opportunity, so on and so on. I think long term, we're headed down for a few months. And there will be counter trend bounces to take advantage of to the upside. When those things happen, though, it's tough to say. So I'll be looking for opportunities to get in at the top end of the risk range and go bearish. All right, everybody. That is my pre-market strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.